Hi guys, I hope all of you are doing well. This is your Nifty Guy. Welcome to today's episode of Decoding Nifty with me. This is a series where we analyze and decode Nifty daily, post the markets on multiple time frames so that we are well prepared to trade the following day with much more confidence and clarity. Humble request to you guys in case if you like the way I analyze Nifty and put out price action concepts, please do not forget to like the video, subscribe to the channel, share it with trading friends and community, as well as put down anything that you might have to say in the comments box, be it feedback or criticism. I am open to everything. Right, today's video again, there will be a lot of things to learn. So even though you might think that these videos are repetitive in nature, wherein we are simply analyzing what is to be done tomorrow, but while we are analyzing what are we supposed to do the next day, what we also cover is are a lot of price action concepts. And I am sure if you follow them, follow the videos regularly, follow the series regularly, you will be adding a lot of value to your trading, right? So on that note, we'll start with today's video. First, we'll start with what we had planned for today versus what happened in the markets, and then we'll go to the second part where we'll plan the trades for tomorrow. Today, the markets actually opened with a big gap up on the news of ceasefire that Mr. Donald Trump had announced between Iran and Israel. Uh, Last night, I went to sleep with the news of Middle East countries like Qatar closing their airspaces, and also some explosions being heard, and military installations in Iraq as well as in Qatar being targeted by Iran. And I thought, okay, tomorrow's going to be another big gap down day, and the volatility will continue as it is. We reach near the high of the range, and then again we are thrown back around the bottom, and which is that is something which is been going on for quite some time since we are in that bigger daily time frame range. And in the morning when I woke up, I saw the news of Mr. Donald Trump announcing that there has been a ceasefire which has been agreed upon by both the countries, and which the market, I think, at the opening took it positively. But then again, the session was extremely volatile today. Majorly, the reason was it was marked with continuous news about even after ceasefire, there was some news wherein Iran had fired some missiles towards Israel, and then Israel had decided to retaliate with full force and everything. So again, these news will impact the market. But say, for example, you are silent and you are put the entire news on mute. You are not going to any forums. You're not trading anything. You're trading in solitude. Can you simply trade at looking at the price action? Yes, you can, and that is exactly what I want to teach you guys around here. So market opened with a gap up. Our plan was to create a long in the market above this particular high. Now I always say that once market opens with a major gap up or major gap down, okay, minor little bit of gap up and gap down is okay. But if market opens with a major gap up or major gap down, please let the market settle and then plan your trades, right? So once markets opened with a major gap up, and this was the high which we had marked on the daily time frame of the entire big range that market is there on. And what I told you was in case if we get into a trade around here on, and if market sustains above this level, we can look at adding quantities. Now, market did give us a close above this particular high, gave a pullback. In case if markets would have given a small retracement and continued, we could have entered a long position around here. But the market had other plan. Market created a new day low. It broke the opening low, created a new day low. There were major trapping involved in the market today. I'll show you exactly how. Markets opened around gap up, showed some bullishness, came down here creating a new day low. People who would have created fresh longs around here would have been trapped. After creating day low, market immediately reversed, creating a new day high. People who would have created shorts around here would have been trapped. Now, it is very important to understand who got trapped last, and what is market trying to do and where is market heading, right? Because this is the information that you can use in your trading. And then, as I told you guys, so for any trade for us to be taken, right now, market has already created a new high, created a new low, then again created a new high. What is the market bias that you will have? Are you biased towards the buy side trades, or are you biased towards the bearish side trades, that is something that you need to find out using market structure. Now, I'll tell you, I entered a long trade around this candle, and I'll explain that reason in very detail. Market created a market opened with a gap up, created a high, broke the day's low, then again created a new high. If you look at the market structure, I'll just delete this 1 second, guys. There's some okay. So if you can follow the market structure around here, market created a this was the high, this was the low. Market created a new high, a higher high, right? Now, for the bias to change to a bullish side trade, what we needed was a higher low, which the market created around here. Now, try to understand the structure that I just drew. This is the structure, right? Now, once this low was created and this pin bar was done, I applied fib on this entire move. And if you see, the pin bar was created at exactly the 0.5 to 0.618 zone. So this can be treated as a valid retracement, and market is now going ahead for a higher high. But do I enter into a trade immediately on the close of this pin bar? Absolutely not. I want a follow through. I waited for the next 5 minutes candle to be again closed in a green, and this is at the close of this particular candle is where I created a long position. And as you can see, the market gave me a very, very good reward around here. I exited somewhere around here. I did not wait till this particular high, but my trailing stop loss had hit around here. So this is the candle which fulfilled almost all the three conditions that I use: high, lower low, and closing below prior low. And that is the reason I exited around here because we could have seen another retracement and majority of the profits going away. That was the reason I exited around this particular candle. And then if you see, uh, in case if anybody has not watched the RSI video, please go and watch it because I do not know, is it me creating the RSI video or what is it that after I have created the video, every day there are live examples that I can show to you with regards to what I had explained in that particular video. So you can see here, market was constantly creating a new high, but on a 5 minutes time frame, which I use primarily for trading, market was constantly creating a new low, which was the sign of a negative divergence. Now, if we have seen the negative divergence, do we immediately short the market? Absolutely not. We need for the price to confirm us first. Nowhere in this entire move there was any sign of bearishness, and market did not give us any particular breakdown anywhere except for this particular breakdown. Now, this particular breakdown also, when this happened, do we actually jump into the markets? Absolutely not. Even if you are to draw this particular trend line around here and at the breakdown of this trend line, you did not get any pullback till around these two candles, right? And even if you do not draw this, try to understand the concept. Market had created a new high and a higher high, higher low structure. But around here, market broke this particular swing low, created a lower low. Again, at the pullback, market created a lower high. Now the structure which we had seen change here with on a bullish side had changed here to a bearish side trade. Plus, along with our confirmation of RSI negative divergence, we saw a double top around here. Markets went this way, came all the way here, came here, and this. So this was the entry entry line for this double top to be confirmed, and you could have shorted the markets around here, which I did. And the SL was obviously big around here with the most logical SL around here, or maybe you can keep a percentage of the entry price. But I had kept the SL around here, and market immediately gave us a good reward. But I exited around here. It was not a very great trade, but a trade which was backed by complete logic and understanding of the market structure. Right. I hope I have been able to clear how to spot market structure changes in the live market by comparing the highs and the lows which are forming in the market. And based on that only, I chose to enter this particular trade. And this is where I got a smaller reward, and then again there were no further trades that were taken by me throughout the day. For tomorrow, our plan of action has to be very simple. First, we'll start with the daily time frame. Now, today's candle is actually, I like to call it ugly. Ugly for the reason it started with a gap up above a doji candle, gave a good high, reached 25,300 for the first time in 2025. I believe I read that in some of the forums. And what looked like a promising close, in case, say, for example, markets would have closed around here, a couple of days sideways or consolidation, then we could have continued and got some good trending moves, right? So those would have been setups that it would have been good for us to trade with a calmer mind, right? Right now, again, we are back in the bigger range. So that is the reason I called today's candle as ugly. What looked as promising turned out to be uh, failed firework. Now, if we are to look at markets on a higher time frame, a 75 minutes time frame, and I'm just using my fib again. If we add join this low with this high, what we can see is that market is right now at a 0.5 to 0.618 retracement level, and that is why you can also see that the market is trying to take support around these levels. Okay, I'll just mark this particular level and delete this so that once we shift to a lower time frame, on a 5 minutes time frame, you can see that the market has taken support from exactly this level. Now, this is a fib level which is on a higher time frame. And why did I use the fib around here? Because market has now created a new high around here, and we connected this low with this high. And if we are to continue the journey on the upside, if we are not going back inside, then this is a very key level of importance for us for tomorrow. Below this particular level and below today's low, we are short, right? I'll mark today's low. Okay, I'll just delete these for the sake of avoiding any confusion. I'll also delete this particular green line. Looks like a breakout failure for now. Below this low, we are looking at a short side trade. Now, just because we are at an important fib level, we can plan for an early long side trade, which can be taken above this particular high with a pullback. Now, say for example, the market is actually just this is a retracement move, and market is taking support and forming a base around the 0.5 to 0.618 levels, and we see a reversal around here, that we can get an earlier entry. Otherwise, what I would have actually waited is to see another confirmation would be to draw this particular fib, and I would have waited for at least the 0.5 level, which is 25,150 round odd levels to be taken out before creating any long position. But just because on a higher time frame, this level is of importance to us, that is the reason I have marked this particular level, and we'll look at a long position above this here. But yes, looking at the range breakout on a daily time frame, which got failed and failed massively, as in we saw a good fall on the downside from the day's high. I would be creating the longs with caution for now, until unless we reach a good level where we can long the markets with conviction. I will be creating longs with caution, and on the short side, yes, we can look at this particular trade. And market, if opens flat within this range and then breaks either side and gives us a uh, pull back, and then we can take the trade, it will be the best case scenario. In case of a gap down, we'll again have to wait for price action to develop, plus the same is the case for a gap up. And in case of any major gap down or gap up like today, again, we'll need for market to settle down before planning any trades based on price action. So I believe it is better to be to trade with caution right now for some more days till there is much more clarity on where the market is headed. Are we again going back deeper inside this range and then maybe turning around from the lower range of this range, or we are going back up again? Let the market decide. We are nobody to decide that. We will not be predicting anything. We will simply be planning our trades, and then we will plan those trade those plans, right? So I believe the approach has to be very, very simple. Keep a keen eye on the market structure, on what the market is, how the market is behaving, where are people getting trapped, and that those things can give you very good trading opportunities, right? And I'll cover more of them in the upcoming videos as and when we upload. So do not forget to like, subscribe, and comment down anything that you have. And on that note, this is your Nifty guy signing off for today. I will see you guys again tomorrow, post the market. FYI, I have also recorded a video on how to look at investments in through my eyes, how I look at investments and how I plan my entire portfolio investments. I've already recorded a video, and that has been scheduled to go live on Friday around 4 p.m. So you can keep a reminder for that. Do watch that. That will open up your eyes and mind towards new ways of looking at the investing journey that you might have. So yeah, I hope you like that video as well. So for today, this is it. I'll see you guys again tomorrow. Have a good day. Thank you so much, guys. Cheers.